historic low of interest rate at 2.25%. As a result, consumers have a high disposable income. And instead of wasting your money, have you ever considered making an investment in the share market? For you to take control of your financial future and secure an investment, one that is set to make a big return. With that in mind, we will discuss and evaluate the supermarket industry, in particular Woolworths, Wesfarmers and Metcash, who together hold 78% of the total market. Oh, hello, hi again. The efficiency, profitability and financial strength all will be assessed to conclude which company will hold the highest return for investment purposes. Now we'll cross to Brooke and Morgan, who will bring in further insight.
Thanks, Turk. Morgan and I have been discussing long and hard about these supermarket wars.
Yes, Brooke, it's been quite a battle. Let's take a look now.
Cutthroat, competitive and aggressive. This is Supermarket Wars. The Australian supermarket industry is unlike any other around the world. A duopoly exists with the two major players, Woolworths and Wesfarmers, dominating the market, to the detriment of smaller players such as Metcash. The question remains, will the retail giants prevail, or will the supermarket industry revolutionise? With this change in the industry, is it time to secure an investment?
Coles and Woolworths have a combined force of 70% of the market between them. They have the ability to more or less control the market. This leaves them with less competition, thereby they can largely disregard market forces and ultimately raise prices, exploiting both consumers and suppliers. Since their inception over 100 years ago, these giants have cut out the competition through acquisitions, mergers and takeovers, and it has proven to be an effective business strategy, knocking out their competition one by one. A further impediment to growth opportunities for Woolworths and Coles is the increased scrutiny of their operations and strategies by the ACCC, who closely monitor their activities. The proposed introduction of a code of conduct for the industry, along with the proposed new legislation regarding predatory pricing, will further aim to contain the duopoly.
The supermarket industry accounts for $3.9 billion in profit per year. Moreover, profit margins are forecast to rise 2.6% annually over the next 5 years, which will only influence the ongoing price war. With a steady growth, this places the supermarket industry into the mature stage of its life cycle, indicating the industry is growing in line with the overall economy. Over the next 10 years, it isn't expected to fall in the declining phase of the life cycle. This is due to the intense competition created from Coles and Woolworths. It will be interesting to see if Woolworths and Coles end their pricing war and can use their market dominance to gain historically higher margins. Or will the development of new players such as Aldi, Costco and potentially Tesco permanently change the market dynamic?
It is an industry constantly evolving, especially with more socially aware consumers. It has never been more imperative for these large corporations to act environmentally sustainable. Introducing the idea of corporate social responsibility, where companies focus on the triple bottom line instead of just profitability. Woolworths is inferior with 66% CSR rating, while Metcash has 60% and Wesfarmers 57%. All companies are well above the average and are constantly thinking of new ways to improve these scores through each financial year.
In terms of efficiency and profitability, Woolworths is a standout, not far followed by Wesfarmers. This is a result of their supply chains and the ability to control and influence over consumers and suppliers. Metcash is in dire straits and its profitability and efficiency have been diminishing over the last decade. In terms of financial strength, Wesfarmers and Woolworths are once again victorious as opposed to Metcash, who has been struggling over the last 5 years. Metcash's business has sustained major damage from the Woolworths-Coles pricing war. Its profitability and cash flows are under significant pressure from a substantial debt it is required to service. Long-term long-term sustainability of its business is questionable. Now, considering all these factors, which company holds the most potential for a future investment?
Well, Woolworths is planning a substantial business remodel by investing $500 million into further price drops, as well as increasing customer satisfaction, which proved to be an effective strategy in a solid decade where they maintained double-digit earnings. It has remained the market leader regardless of the ongoing competition created by Coles. It has strong profitability, cash flows, and significant financial credibility in both the banking and investing communities. For this reason, investors should buy shares in Woolworths, and if you're after a quality blue chip share, this is the one you should look for.
Likewise, the main attractions to Wesfarmers is its significant dividend and has a history of paying large capital returns to shareholders. Despite low single-digit earnings and growth in 2014, the idea of such a large return for shareholders captivated investors and market capitalisation rose $1.9 billion. While this generous dividend was offered as a mere mirage, shareholders will be waiting for the next big move for its future growth. For this reason, it would be suggested current investors should hold, as there is no real plan for future growth, but at the same time still remains a strong contender in the supermarket industry and a safe blue chip share.
Concerningly, Metcash is feeling the pressure of the duopolis and is falling prey to Aldi, who has been stealing considerable market share since its introduction in 2001. Metcash is regarded as the market pariah and has completely lost all credibility in the investment community after destroying significant shareholder value in the last 3 years. One wonders what the long-term future holds for Metcash, and if they will fall subject to the deadly hand of the liquidator, or will we see a takeover? Metcash should be avoided at all costs, and a sell rating has been applied.
Supermarket wars. The saga continues.
Both Wesfarmers and Woolworths, regardless of Woolworths being the dominant market player, both stand out in terms of profitability and financial leverage. These two companies are regarded as quality investment and highly regarded in the finance, banking, and investment communities. Shareholders can be sure that they are involved in sustainable, ethical companies who place significant emphasis on shareholder value. The Australian supermarket industry will be the subject for significant change in the future. Regardless, both Wesfarmers and Woolworths would remain nothing but quality investment.
Supermarket wars. The saga continues.